Hi, hello, my dear CA final students appearing for May 26, September 26, and Jan 27. The most awaited rocket revision videos on CA final IDT. So, we are going to start in this video. And if you have any That's It book of Jan 26 and if you are appearing for May 26, you can definitely make use of that book. You don't have to buy any other book. Suppose if you have any other earlier That's It book, so please do purchase that. And also those students who are appearing for September 26 or Jan 27, you can make use of this book, and we will be also providing the updates so in our website and even in YouTube as well. And so this particular indirect taxes rocket revision batch, we are going to have a quick recap of each and every chapter. So but we are going to put it like video wise, like chapter wise each video, and so that you can watch it either in a normal speed, or if you want to watch it in 1.5x or 2x speed also, you can watch it. That's not a problem. And whatever doubts that you have, you can just put it in the comment of this so that I will be replying to that, and it will be beneficial for others also. And then, so this particular revision batch, is it sufficient for the purpose of exam without watching any lectures? Definitely no. So this is just a revision, which means that so you may not be having the complete idea of each and everything. So therefore it is always advisable to either purchase the regular batch or exam oriented batch, and then you should watch this revision lectures. If you have already purchase some other earlier batches, then it's fine, because you have attended the CA final IDT once, so you can kickstart with this revision. And this revision videos are going to be like weekly revision videos, because it is aligned with our test series which we are commencing from this weekend onwards. So due to that reason, weekly wise, so few chapters will be uploaded, and my objective is that by end of this February month, the entire portion will be completed with respect to IDT revision. Then, so let's see the ABC analysis related to this particular CA final IDT. So, but this ABC, I cannot guarantee that this is the way in which it needs to be asked, because I don't know about other subjects, but when it comes to my subject, that is indirect taxes at CA final level, I have observed one thing, that there is no particular weightage for each and every chapter, because a single question will have information from multiple chapters. So due to that reason, if you are preparing only like based on the weightage etc and all, it is not going to work out. For example, if there is a question related to place of supply, in that place of supply question they will be connecting something related to value of supply and even valuation rules etc and all. So due to that reason only, my advice is that so you don't have to follow any particular weightage etc, and always for the purpose of success in CA final exam, it is better to have 100% coverage. So which means that I need to complete everything, keep that in mind. So it's not like I will be making a selective preparation etc and all. So selective preparation is not going to work out, or any other strategy is not going to work out, because we are facing the CA final exams, and attempt after attempt they are making the paper difficult. So that's the reason why don't leave anything. So try to cover as much as you can. So that is the objective. But even then, so where we need to give more importance and where we need to give less importance, so for that purpose I have just given this ABC analysis. So these are the 10 topics which are category A topics, that is levy and collection of CGST, IGST, wherein we will be covering in this FCM, RCM, e-commerce operator transactions etc. Then place of supply, then value of supply, input tax credit, exemptions. So these 5, then search, seizure, offense and penalties, because of late from that lot of questions they started asking. Then types of customs duty, valuation under customs, exemptions under customs and baggage. These are the A category topics. You should be thorough with this, and nook and corner you need to be clear and practice as many questions as you can. And after completing watching these revision videos, the next task what you need to do is that you need to take your solved workbook, and in that solved workbook you need to complete the mighty 200 questions, the important 200 questions chapter wise, which I have given in the solved workbook. So please invest on the updated solved workbook, always it is beneficial. So reason being, so because when we try to solve as many questions as we can, so our conceptual knowledge will increase, and even we will be able to connect it in different places. That's the reason. So solve many questions as you can. If you have already invested on some other author book, you can make use of that also. I don't have any problem with respect to that, but follow the latest edition. So because there will be some changes, etc. and all, which will have a butterfly effect in different places. So due to that reason only I am suggesting you this. So first mighty 200 questions, and after that mighty 200 questions you need to solve the remaining questions, okay, chapter wise. That should be the target, okay, as we are starting the preparation well in advance, so that you have to cover everything. So don't make any selective preparation. So say if you are watching this particular video 1 month before the exam, then it is fine, but otherwise now you have ample time. So kindly ensure that you are not leaving any stone unturned. Got it? Now, so this is about category A topics, and category B topics also there, C category topics also there. But C category topics, at least you have to do the reading once. So even if you are not solving much questions out of it, it's fine, but at least one reading is required with respect to this. So this is about AB's analysis for CA final exams. This is based on the past exam, but not necessary that always it needs to be like this only. Now, after attending this particular rocket revision, you might feel like, like this is sufficient, etc. and all. Definitely not. So tomorrow, if you are believing in this rocket revision and if you go to the exam and if you are flunking in the exam, don't blame me. I am clearly giving the disclaimer because I am going to cover only the revision of everything. So this cannot be supplemented to a regular class, or this cannot be supplemented to any other batch, okay. Then, so the first one in this video, we are going to complete introduction and supply under GST. Introduction, it is just given as an annexure in your study material in the first chapter. So in this basic concepts, we are going to cover first how GST is formed. So we all know that all indirect taxes levied by central government in the past, except customs duty, got subsumed into GST. Even the additional customs duties. What were the additional customs duties? CVD and SAD, countervailing duty to counterbalance excise duty, SAD to counterbalance the sales tax, also got subsumed into GST. Earlier we had these two as a part of customs duty, and now CVD is to counterbalance excise duty. As excise duty got subsumed into GST, CVD also got subsumed into GST, and SAD is to counterbalance sales tax. As sales tax got subsumed into GST, SAD also got subsumed into GST, which means that now on import of goods we need to pay, along with basic customs duty and other customs duties, IGST also. Then next, second point, customs duty is outside the ambit of GST. However, additional customs duties, CVD, SAD, this point we have seen, and specified indirect taxes levied by state government. What were they? Total 6 specified indirect taxes. Number 1, value added tax on intrastate sale, advertisement tax, then luxury tax, entertainment tax, lottery and betting tax, then purchase tax, that is octroi. These are the 6 indirect taxes levied by state government that got subsumed into GST. But other indirect taxes levied by state government, like local body tax or mandi tax or any other tax which is levied by the state government, not subsumed into GST. Even levies of local authorities like municipal taxes or property tax or any other local authority tax also not subsumed into GST. And we have entertainment tax levied by both state government as well as local authority. Only entertainment tax levied by state government got subsumed into GST, but local authority not got subsumed into GST. So but at present we have 2 major indirect taxes. One is GST, another one is customs, but we have other state government and local authority indirect taxes also. And the type of GST model that we are following in India is dual GST model. In dual GST model, what will happen? Both central government and state government parallelly levy GST on the common tax base, and this dual GST model India adopted from Brazil and Canada. And we had Constitution 101st Amendment Act 2016. So for the purpose of bringing the GST, first Constitution they have amended 7th schedule to the Constitution, which empowers union list, state list and concurrent list. So union list where central government will be having power to make law, state list where state government is having power to make law, concurrent list where both central government and state government will have power to make law. Wherein, so now as central government, state government both are required to have the power to make the GST law. So due to that reason, the Constitution got amended, and accordingly we have got the GST Act in 2017. Then GST Council. So as the GST we have is dual GST model where both central government and state government on the common tax base levy the GST, which means that the decision making cannot be unified. So it should be combined by both central government and state government. That's why they created one council, GST Council, which is not a government body but a constitutional authority, which means it derives a power from the Constitution. Article 279A of the Constitution. And who will be the chairman of this particular GST Council? The Union Finance Minister. Prime Minister don't have any role. So it is Union Finance Minister, and the state ministers, state finance ministers will be the members. So there will be total 33 members. So one Union Finance Minister, one Union MP in charge of the state revenue, like Minister of State, like that we call them. And then for 31 states, we have 31 state finance ministers. So total 33 members will be there, and the quorum will be 50%. So minimum 50% should be present in the meeting, then only it will be called as a valid meeting. And then the state government vote will have 2/3 weight and central government vote will have 1/3 weight. So which means that central government vote is very less compared to the state government votes. If the state governments decide something, so that is going to happen here. So that's the reason why they have given the weighted votes. And what should be the weighted majority? Weighted majority is also not simple majority. It will be like 3/4 majority that is required. Then only the decision is considered to be taken. And they give important decisions like rates, exemptions, then procedural related aspects, etc. and all, and state specific exemptions for special category states. All those things will be taken care by GST Council. And we have types of GST, CGST. CGST full form Central Goods and Services Tax levied by central government on intra-state supply. SGST, State Goods and Services Tax levied by state government on intra-state supply. Union Territory GST, UT GST, and it is levied on intra-state sale by central government because union territories are under the control of central government. And then we have IGST, that is Integrated Goods and Services Tax, which is levied on interstate supply, and that will be levied by central government. So this is about these four. Then 5 will be GST compensation cess. GST compensation cess is for the purpose of giving compensation to the states on account of implementation of GST if they have suffered any loss. But now what has happened, majority of the goods were outside the scope of GST compensations, as even the recent motor vehicles also. So in the July 2025, they have made a big change wherein, so these motor vehicles were removed from the GST compensations. As of course, the rate of GST on motor vehicles have been revised to 40%. Now the maximum rate of GST is 40%. Previously, the effective maximum rate was 28%, and now the effective maximum rate is 40% for many goods. It will be applicable mainly motor vehicles like luxury motor vehicles, etc. And this particular GST compensations will go off by 31st March 2026. That's the reason why now itself they have just removed the powers of GST compensations. And IGST, even though levied by central government, but completely it is not retained by the central government. Now we need to see whether it is like recipient eligible for ITC or not eligible for ITC. For example, I am the supplier, you are my recipient. So whenever I am making sale, it is an interstate supply. So the type of GST will be IGST. So this IGST I will collect and I will remit it to the central government. That's clear. Now what will happen? Are you, that is recipient, a registered person or unregistered person? We need to check. If the recipient is a registered person, means you are a registered person, you will take ITC of this IGST. Now what you are going to do with this IGST? If this IGST is utilized for payment of CGST, then entire revenue will go to the central government. If this IGST is utilized for payment of SGST, then this revenue will go to the state government. So like that, depending upon how you are going to utilize the IGST credit for payment of your liability, it will move to the respective treasury. What if you are an unregistered person? When you are an unregistered person, then the transaction what I am making with you is also subject to IGST, whether it is B2B or B2C. So when I make an interstate supply, it will be subject to IGST. I will pay IGST. Now what central government will do? 50% they will retain. Remaining 50% they will be giving to the consuming state based on the place of supply. IGST is levied by central government and 50% of the transfer to the state based on place of supply. If place of supply cannot be ascertained. Why place of supply could not be ascertained? Maybe because it is deemed interstate supply, like supply to SEZ. Even though SEZ is in the same state, but it will be deemed interstate supply. Due to that reason, place of supply, we will mention it as other territory or foreign territory. So then in that case, the place of supply is not ascertainable. Then what will happen? So then it shall be apportioned between the states based on the turnover of the supplier during the financial year. Say during the financial year, so what is my turnover? Say I am in Tamil Nadu, sale to Andhra Pradesh 20 lakhs and sale to Karnataka 30 lakhs and sale to Telangana 40 lakhs. So which means that Andhra Pradesh, Karnataka and Telangana in 2:3:4 ratio. So it will be divided. What will be divided? The remaining 50% portion. Say 10 lakhs is the worth of sales where the place of supply is not ascertainable. 10 lakhs is the sales where the place of supply not ascertainable. In that some IGST will be there. Say on the 10 lakhs IGST is 18%. So 1,80,000. 90,000 will go to the central government. Remaining 90,000 will be there. That remaining 90,000 will be divided between Andhra Pradesh, Karnataka and Telangana in 2:3:4 ratio. So that's what they are trying to convey. So based on the turnover of the supplier during the financial year, if the turnover is also not ascertainable, why it will not be ascertainable? Maybe I am not filing the returns properly. So GSTR1 not filed properly, or annual return not filed properly, etc. and all. So then the turnover may not be ascertainable. In that case, it will be apportioned to all the states based on their previous year revenue. Which revenue? GST revenue. So all the 28 states plus 3 union territories with state legislature. What are the 3 union territories with state legislature? Jammu and Kashmir, Delhi and Puducherry. So 28 plus 3, 31 states. It will be distributed, and for union territories also it will be given. But the remaining 5 union territories, total there are 8 union territories. In the 3 union territories with state legislature treated like a state, that is Jammu and Kashmir, Puducherry and Delhi. So therefore that revenue will go to that particular union territory only. Whereas there are 5 other union territories which are not covered under this state, so which will be under the control of the central government. These are called as union territories without state legislature. So we have Andaman and Nicobar, Lakshadweep, and then Daman, Diu, Dadra, Nagar Haveli, Chandigarh and Ladakh. So these are the 5 union territories without state legislature. In that case, the proportionate GST, IGST component of that will go to central government only. That is the meaning. So states or union territory based on their previous year revenue. So this is given in section 17 of IGST Act. Then here if you see the types of GST depends upon whether it is an intrastate supply or interstate supply. So for that we need to know first, supply is divided into 2. Supply is the taxable event under GST. Indirect tax is the event based taxation. Upon happening of an event, the tax will be applicable. So that particular event based taxation, the taxable event under GST is supply. So therefore, if the supply triggers, then the GST liability will occur. If it is not a supply, then GST liability shall not arise. So this particular supply of goods or service or both is a taxable event, and that supply is divided into 2. Intrastate supply and interstate supply. What is intrastate supply? If the location of supplier and place of supply is in the same state or same union territory, then it is intrastate supply, and the type of GST will be CGST plus SGST or CGST plus UTGST. Interstate supply. Interstate supply means if the location of supplier and place of supply is in 2 different states or 2 different union territories, or the state and union territory. For example, if the supplier is in Tamil Nadu and the recipient, like place of supply, is in Maharashtra, so 2 different states or 2 different union territories. Say for example, supplier is in Andaman and Nicobar and the place of supply is in Lakshadweep, 2 union territories, a state and a union territory. So supplier is in Orissa and the place of supply is Chandigarh. So then a state and a union territory, it will be interstate supplies. And whenever it is interstate supply, IGST will be levied. So that is with respect to this. And next we have seen state of Jammu and Kashmir divided into 2 union territories, that is state like previously the state of Jammu and Kashmir, union territory of Jammu and Kashmir and union territory of Ladakh. Union territory of Jammu and Kashmir is a union territory with state legislature. Union territory of Ladakh is union territory without state legislature. Between Jammu and Kashmir and Ladakh, if there is any transaction also, it will be subject to IGST. So that will come under one state and one union territory. Union territories with state legislatures are treated like state only, and whereas others, union territory without state legislature, where UTGST Act will be applicable. And union territory of Dadra, Nagar Haveli, Daman and Diu got merged into single GST. The next one, section 146 of CGST Act deals with the GST network. As the implementation of GST, and there is a matching concept which we have, as well as completely the tax payments is now automated, there is a robust system, that is information technology system, that should be in place. For that purpose, they have created GST network. So to provide the information technology infrastructure for the purpose of implementation of GST, and it will coordinate between central government, state government, taxpayers, banks and other people who are involved into the GST ecosystem. And the main activities that it will facilitate is registration, then payment of taxes, then forwarding the returns to the state government and central government, matching of ITZ, that is whenever we have purchase something, so that person's liability will be matched with our ITZ. So this matching of ITZ, matching of tax payment with the banks, all these are the works, including settlement of IGST between the central government and state government and e-way bill. These are the functions of GST network. Then constitutional provisions, if you see Article 265 of the Constitution, which says that tax shall be levied and collected only by authority of law. So without constitution power, the tax cannot be levied. Article 245, power for enacting laws is conferred on Parliament and state legislature, that is only union list and state list. Article 246 governs the subject matter of laws made by Parliament and state legislature. So that is about this. 245 and 246 are connected, wherein 245 the power is divided between central government and state government, that is Parliament and state legislature, and accordingly what are the entries which are there in that union list and state list, that is there in Article 246. Then goods outside the ambit of GST, previously only alcoholic liquor was there, but now alcoholic liquor for human consumption and denatured extra neutral alcohol, rectified spirit used in manufacture of alcohol. Alcoholic liquor for human consumption is the finished product, whereas this undenatured extra neutral alcohol, rectified spirit used in manufacture of alcohol is the inward supply, that is usually the raw material, as the outward supply is excluded from the ambit of GST. So on that in raw material also they have excluded it from the ambit of GST. What if there are other raw materials purchased by the liquor manufacturers? On that will there be any GST? Definitely yes. On that there will be GST. Only with respect to these three it is excluded from the ambit of GST permanently, and in future also it will never be included into the ambit of GST. Whereas there are 5 petroleum products, that is crude oil, petrol, diesel. That is, this petrol is known as motor spirit, and diesel, which diesel? High speed diesel, then aviation turbine fuel and natural gas. These are the 5 petroleum products that is outside the ambit of GST temporarily, as and when decided by the GST Council, it will come into the ambit of GST. And tobacco is subject to both central excise duty as well as GST, even though central excise duty got subsumed into GST. But even today, that central excise duty is applicable with respect to few products. Number 1, on alcoholic liquor, we have state excise duty, we don't have central excise duty. Then on petroleum products, we have central excise duty. And then on tobacco products, we have central excise duty. So central excise duty is even today applicable. So tobacco is subject to both excise duty and GST. Whether CST and VAT, central sales tax and VAT, is applicable on tobacco products? No, it is not applicable, only this. And whether CST is also applicable, VAT also applicable at present? Yes, it is there, but its limitation is only with respect to alcoholic liquor for human consumption, petroleum products, not for others. Central sales tax was in case of interstate supply, value added tax in case of intrastate supply. CST will be levied by central government, but it will be collected and retained by state government, whereas value added tax levied and collected by the state government. So both CST and VAT revenue will go to the state government only. Central excise duty revenue will go to central government, and state excise duty is applicable on alcoholic liquor for human consumption and other undenatured external alcohol or rectified spirit, that will go to the state government. Then opium and narcotic drugs will be subject to both state excise duty and GST. Apart from alcoholic liquor and petroleum products, 3 alcohol products and 5 petroleum products, GST will be there on all other goods, whereas with respect to the other indirect taxes, it will continue. I told you, not all indirect taxes levied by state government got subsumed into GST. State excise duty not subsumed into GST. So therefore, the state excise duty will be applicable on opium and other narcotic drugs along with GST. So these are the basic concepts that we have with respect to the annexure of first chapter, that is supply under GST. Now we are moving on to the next one, that is supply under GST. So in this supply under GST, we are going to cover 2 sections, that is section 7 and section 8. Section 7 deals with supply under GST. Section 8 deals with composite supply and mixed supply. So in that section 7 of CGST Act, so all these sections will be of CGST Act. With respect to IGST Act, we have only few sections. Section 7 of CGST Act 2017. 7 subsection 1 talks about the inclusions in the supply, and 7 subsection 2 talks about exclusions from the meaning of supply. 7 subsection 1A, classification of supply into goods or services, and 7 subsection 3, any activity which is classified as supply of goods can be reclassified as supply of services and vice versa. But this particular 7 subsection 3 power they have not invoked. Central government on the recommendations of the council, they can do that, but they have not yet invoked this power and they have not given anything, which means practically these 3 subsections only what we have. In that 7 subsection 1, supply includes 7(1)(a), any activity for consideration in the course or furtherance of business. So what you need to remember is that first it should be for a consideration, second it should be in the course or furtherance of business. Any activity will be applicable, but activities such as like that it is given in the act, such as, remember, debts RLL. So D for disposal, E for exchange, B for barter, T for transfer, S for sale, debts. R for rental, L for license, another L for lease. But not only these activities, but all other activities will be covered under supply. So any activity for consideration in the course or furtherance of business. 7(1)(a) is between a person other than individual and its members. Person other than individual will be like HUF, firm, AOP, BOI, LLP, body corporate, company, cooperative society, etc. So this is person other than individual. Between them and the members. So are the members, for example, HUF and the members of the HUF, partnership firm and the partners, company and the shareholders. Between them, if there is any transaction, that transaction is for consideration. Definitely it will also become supply under 71AA. So 71AA, any activity between a person other than individual and its members, and that should be for a consideration. So in this regard, whether a partnership firm which is providing services to the partners for which they collect money from the partners, or a company which is providing services to the shareholders and collect money from the shareholders, will it be subject to GST? Definitely yes, it is subject to GST because it will become supply under GST. Example, share transfer fees collected by the company from the shareholder for transfer of shares. Then suppose if the partner is providing the services to the partnership firm for which he is getting a remuneration, will that also be subject to GST? No, because withdrawal of profit, investment activity is not a supply. So when I am doing some business where I invested in the business and I'm getting the profit out of the business, it is not subject to GST. It is based on CBSE FAQ. It is clearly specified, so we don't have to bother about that. So investment activity, the profit is not treated as consideration, not a supply. So therefore the partner who is getting money from the partnership firm, that is not supply. But what if the partner has made a separate agreement with the partnership firm wherein so they will be getting some technical fees or professional fees, that will become supply under 71AA. So between a person other than individual and its members for a consideration. 71B is import of services from whom? From any person, but that should be for a consideration, and it may or may not be in the course or furtherance of business of the recipient. Usually we need to see import of services whether it is in the course or furtherance of business or not from the recipient point of view. For example, what we have discussed is that whenever there is Amazon or Netflix subscription, it is import of services and it is for consideration. It is not in the course or furtherance of business, even then it will become supply under 71B. Then if it is in the course or furtherance of business, no doubt it will be supply under 71B, but even if it is not in the course or furtherance of business, they are telling it is supply. Then 71C, we have some activities in schedule 1. So whenever we are writing 71C, we need to write read with schedule 1 of CGST Act. Activities in schedule 1, even though not for a consideration. So what are those activities? DRIP, D for disposal of business asset on which ITC is available. I have a business asset, I'm purchasing that business asset, and that business asset is being disposed of. So disposed of, it should be permanent, it should not be temporary. So either permanent transfer or disposal, and on that business asset I have availed the ITC. Then in that case it will become supply because I am enjoying the ITC. So whenever the asset is not with me, I should not enjoy that ITC. So they are calling it as supply, and accordingly we need to pay GST. But how the GST will be payable? Suppose if it is capital asset. If business asset can be either capital asset, that is current asset, or non-current asset. Suppose if it is a non-current asset, then in that case that is fixed asset. Then we need to take 18 subsection 6. 18 subsection 6 talks about, so like sale of capital goods on which ITC is availed, the GST payable will be ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on the sale value of such goods. So we don't have the sale value. So therefore we need to determine the value as per rule 30 or rule 31. Rule 30 talks about cost plus 10%. So whereas rule 31 talks about the residual value. So any of these two should be taken into GST rate, whichever is higher. That is ITC avail minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value of such particular goods. So as determined under rule 30 or rule 31 of the CGST rules, so whichever is higher should be taken. Suppose if it is a current asset, even current asset can be coming under business asset. So whenever it is a current asset, then what is the treatment of the current asset on which ITC is availed? So then when it is disposed of, you need to determine the GST payable in terms of section 15 read with CGST rules 2017, because it is not coming under 18 subsection 6. It's not a capital asset. So it is not capital goods. What is capital goods? Capital goods means any goods which are purchased and capitalized in the books of the person who is purchasing it is known as capital goods. Whereas all other goods will be called as no inputs. It is not called as capital goods. So therefore, only for capital goods 18 subsection 6 is applicable, but for inputs 18 subsection 6 is not applicable. For example, I am purchasing some raw material. On that raw material, GST paid is availed as ITC. That raw material I am disposing of. Then in that case, definitely it will become supply under 71C. But the GST is not payable under 18 subsection 6 like ITC minus 5%, but normal section 15 read with rules, that is CGST rules. Again rule 30 or rule 31. So rule 30 is cost plus 10%. Rule 31 will be coming under residual value. So any of these two should be taken and we need to compute the GST and we need to pay. What if I don't know how much is the value under rule 30 or rule 31? So that is the place where we will go for provisional assessment. So when it is not possible to determine the value as per section 60 of CGST Act, we will be making an application for provisional assessment. When we make application for provisional assessment, the officer will determine as to how much is the value, and accordingly he will pass a provisional assessment order, and thereafter he will do the final assessment order. That is the connection there. Or we can also go for the advance ruling. So we can seek advance ruling also with respect to this, because value of supply is one of the question for the purpose of which we can go for advance ruling. So you can make an application for advance ruling to the authority for advance ruling, and you will be able to get it as to what is the value, and that can be adopted. So that is the connection with respect to this. Then next we have R for related party transaction, including transaction between distinct persons. But here very important point what you need to remember is that it should be related party transaction or transaction between distinct persons. And in the previous, the important point is on which ITC is available. What if ITC is not available? So then it is not a supply. So for example, I am purchasing a car. On car I have not availed ITC because it's a block credit. I should not avail ITC, and that particular car I am giving it to an orphanage. So in that case it is disposal of business asset, but on which ITC is not availed. And one more noteworthy point in this regard is that suppose if I am manufacturing some goods and that manufactured goods is disposed as gifts or free samples, then will it come under 7(1)(c) D point? No, because say for example I am purchasing the raw material and the raw material is converted into shampoo, and the shampoo is being given free. Now in this case, as a free sample, what I am disposing of is a business asset, but on that I have not availed ITC, because what I have disposed of is shampoo, but on that I have not availed ITC. I have availed ITC only on the inputs that is purchased. So due to that reason, manufactured goods, when it is distributed as gifts or free samples, it is not a supply under 7(1)(c). Keep that in mind. That is this D point. Then R point also I told you it should be related party or distinct person. I for import of services. What is the difference between 7(1)(b) import of service and this? 7(1)(b) is import of service from any person, but whereas this is import of service from a related person or their establishment located outside India. It is not another establishment means any establishment. It should be their establishment. For example, there is a company in India and it has a branch. It has a branch outside India. From their establishment, if it is importing the services or import of service from any related person, but it should be without consideration, and it should be in the course or furtherance of business, then it will become supply under 7(1)(c). Then principal agent transaction. So if there is any transaction that takes place between the principal and the agent, but very important point here is that the agent should be acting on behalf of principal. So then the principal agent transaction will become supply when the agent will be acting on behalf of principal. If the agent raises invoice in his name, then the agent is acting as on behalf of principal. So now the principal sending the goods to the agent will become supply under 7(1)(c). Or if it is a purchase transaction, if the invoice is in the name of the agent, so then the agent is acting on behalf of principal. When the agent is sending the goods to the principal, that will become supply under 7(1)(c). So between principal and agent, it will become supply provided the agent is acting on behalf of principal. These are the 4 activities that we have under 7(1)(c), D, R, I, P. And next, if an activity is not covered under 7 subsection 2. 7 subsection 2 talks about exclusion. So first we need to see 7 subsection 2 exclusion. If an activity is in 7 subsection 2, it is not a supply. If it is not in 7 subsection 2, just check whether it is covered under 7 subsection 1. Yes, it is covered under 7 subsection 1, then it is supply. What if it is not covered under 7 subsection 2 and it is also not covered under 7 subsection 1? Then consequently it is not a supply. So that is with respect to this. Then these are the definitions which we need to understand based on this discussion so far. Then summary of 7 subsection 1. So this table is so crucial, very important table. 7(1)(a), activity is any activity, consideration should be there and it should be in the course or furtherance of business from the viewpoint of supplier, and the coverage is either goods or services. Whereas 7(1)(aa), any activity between a person other than individual and its members. And consideration, yes, it should be in the course or furtherance of business, supplier point of view, and the coverage is either goods or services. The difference here is that 7(1)(a) between any person to any person, 7(1)(aa) between a person other than individual and its members. 7(1)(b) import of services. Import of services from whom? Import of service from any person, but it should be for a consideration. It may or may not be in the course or furtherance of business, and always import of service we need to see from recipient point of view, and the coverage is only services. Goods are not covered here because that is a subject matter of customs. 7(1)(c) read with Schedule 1, DRIP, D for disposal of business asset. That disposal may or may not be in the course or furtherance of business, and it should be without consideration. All these 4 it's without consideration. And disposal of business asset from supplier point of view, and the coverage is only goods. And R for related party transaction or distinct person again. So it should be in the course or furtherance of business from supplier point of view, and the coverage is either goods or services. Import of service from a related person, no consideration, but it should be in the course or furtherance of business. That is very important. and we need to see always import of service from recipient point of view, and the coverage is only services. Whereas the principal agent transaction is only in the context of goods. If there is a service which is given by the principal to the agent without consideration, we don't have to bother about 7(1)(c). So we need to apply only for goods. So 7(1)(c) principal agent transaction is only with respect to the goods, and it should be in the course or furtherance of business, and from supplier point of view we will see. And whenever there is no consideration, then only we need to refer to 7(1)(c). If there is a consideration, we will not refer to 7(1)(c). Then, what are the activities which are excluded from the supply 7 subsection 2? As per 7 subsection 2, you need to remember pillar less dough. These are the exclusions from the meaning of supply. Pillar less dough. P for post. What post? Government post, constitutional post, or nominated post. So, like MLAs, MPs, that will be government post. Then constitutional post like Chief Justice of India or Governor, that will be constitutional post. And nominated post, there is a body or any organization of the government wherein the head of that organization or any member of that organization is appointed by the government, like SEBI chairman or RBI governor, etc. That will be coming under nominated post. Then I for insurance services jointly supplied. So that is co-insurance services. So in case of co-insurance services, there will be one person called as lead insurer. That lead insurer will collect the premium, and that premium collected by lead insurer in turn shared with the other insurers. That is, say for example, 3 insurers are there, A, B, C. A is a lead insurer, he collect the premium, and that premium is covered under supply. Now A will share the premium with B and C, so that receive, like whatever share of premium that is received by B and C will be excluded from supply, provided A pay GST on the gross premium. So if lead insurer pay GST on the gross premium, then L for legal service, legal fees collected by the court or tribunal. Court or tribunal will collect some legal fees or court fees, that is excluded from supply. And L for land sale including sale of immobile property. So any type of land, it will be agricultural land or urban land. So whenever it is sold, that will be excluded from supply. When building is also excluded from supply. But when building is excluded from supply, if the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, so then it will be excluded from supply. So what if the consideration is received partly before, partly after? Then it is not excluded from supply. What if the entire consideration is received before completion certificate or first occupation, whichever is earlier? Then also it is not excluded from supply. Only if entire consideration is received after obtaining completion certificate, then it is excluded from supply. And actionable claims other than specified actionable claims is excluded from supply, that is HC block. H for horse racing, C for casinos, B for betting, L for lottery, O for online money gaming, and G for gambling. These are the specified actionable claims covered under supply, and all other actionable claims are excluded from supply. Then R for, that is pillar. In that R for reinsurance commission. So reinsurance commission, there is a insurer. So what insurer is doing, he is taking reinsurance with another insurance company. Say for example, insurance company A is the insurer and they are taking reinsurance from an insurance company B. So as B gets a business from A, so B will be giving some commission to A. So therefore this particular commission which is received by A will be excluded from supply, provided so the reinsurer, that is B, pay GST on the gross premium. Say for example, 10 lakhs is the insurance premium. So A is bringing 10 lakhs to B, for which B has given a premium like commission of 1 lakh. Out of the 10 lakhs, 1 lakh is given. Now B is paying GST on what? 9 lakhs or 10 lakhs? B is paying GST on 10 lakhs. Then A received 1 lakh as commission, that will be excluded from supply if reinsurer pay GST on gross premium. Then liquor license granted by state government will be giving license to sell liquor. So this license fee collected by state government is excluded from supply. But what if one person who got the license, subsequently he leases out that license or he transfers that license to some other person and gets a consideration, that is not excluded from supply, that is covered under supply. Then E for employee to employer, but in the course of employment. What if employee is providing services not in the course of employment? That is not excluded from supply. Only in the course of employment is excluded from supply. Yes, for sovereign functions. Sovereign functions means municipality or gram panchayat functions will be coming under sovereign functions, that is excluded from supply. All activities of government in relation to Article 243G. So if it is panchayat, then it is Article 243G of the Constitution, and if it is municipality, Article 243W of the Constitution. 243G and 243W of the Constitution, they have listed out certain activities, and this Article 243G is 11th schedule and Article 243W is 12th schedule to the Constitution. So just keep this in mind. So panchayat activities, this panchayat activities will be Article 243G read with Article 243 read with Schedule 11. This is panchayat. and then we have municipality. So this municipality activities will be article 243W read with schedule 12 of Indian Constitution. So these are the activities of panchayat and municipality that will be given in the question. So you have to check out. Just because it is given as panchayat functions, you cannot say that it will be excluded from supply. So we have to write in the answer, provided it is covered under article 243G read with schedule 1 of the CG, like of the constitution, like that. So that is with respect to the sovereign function. Then another S will be sale before import. So whenever the goods are in transit, when the goods are in transit before clearance, that is before import, if the goods are like having a document of title. What are the document of title? If the goods are imported by airways, it will be called as airway bill. If the goods are imported by waterways, then it will be called as bill of lading. So this airway bill or bill of lading is being transferred to some other person. So then the subsequent buyer will be treated as the importer. So therefore whatever money that we receive for transfer of this will be excluded from supply. That is sale before import. Then death related. So pillar less do, D for death related activities. What are the death related activities? Funeral, burial, crematorium, mortuary, including transportation of the deceased is excluded from supply. So all post death activities is excluded from supply. Then O for outside the country movement of goods. So goods originate outside India, terminate outside India. For example, I am a seller and you are a buyer, both are in India, but I have a branch outside India and you have a branch outside India. So from my branch in Germany to your branch in Australia, the goods are being sent. Now in the case, even though you have made the payment in India, but the movement of goods is completely from outside India to outside India, due to that reason it is excluded from supply, because it is neither import nor export nor a domestic transaction. That's why it is excluded. Then next W. W refers to warehouse the goods sold under customs. So under Customs Act, when we are importing the goods, that imported goods can be kept in a warehouse. I am importing the goods and keeping it in the warehouse without payment of customs duty. I get a warehouse receipt. That warehouse receipt is a document of title. Now I transfer the document of title to the subsequent buyer. Now the subsequent buyer will be treated as the importer, and therefore anyhow they will pay IGST. So due to that reason, whatever money that I receive for transfer of warehouse receipt will be excluded from supply. So that is known as warehoused goods under customs sold, including goods warehoused in a SCZ or free trade warehousing zone. So here we need to understand one point. So this is the latest amendment for May 26 exam. So what happens is that first I am importing some goods. That imported goods either I can deposit in a customs warehouse, or I can also keep it in a warehouse in SCZ. So whether I need to pay customs duty? No, I don't have to pay any customs duty, because any goods which are imported into the SCZ, customs duty not payable. Also any goods which are imported into free trade warehousing zone, so even FTWZ, even then we don't have to pay any customs duty with respect to those goods. But what happens is that, so these goods, what I am doing, I am selling to DTA. So when I am making sale to a DTA, so we have one point. Any goods sold from SCZ to DTA, the person in DTA will treat it as import and they will pay the customs duty, because as per SCZ Act 2005, so any sales from SCZ to DTA will be treated as import to the person who is in the DTA, even though Customs Act is not applicable, even though GST Act is not applicable, but the SCZ Act overrides this and says that the person who is in DTA, who is buying from SCZ, is required to pay the customs duty. As he is required to pay the customs duty, as if the goods are imported by him, so anyhow he will pay IGST. That's the reason why. So whenever we have deposited the goods in the SCZ, and that particular goods deposited in SCZ in a warehouse, when we sell it to a DTA, for us it will be excluded from supply. So including goods warehoused in SCZ or free trade warehousing zone before clearance for home consumption or export. So before clearance for home consumption or export, we transferred. What if we have cleared it for home consumption and then we have made sale? Then we are called as importer. Anyhow we would have paid the customs duty. When we are clearing it from the warehouse, either the warehouse can be in under customs, or the warehouse can be under SCZ, or the warehouse can be under FTWZ. When the person who is depositing is only clearing, then it is clear for home consumption, he need to pay customs duty. Subsequently when he makes sale, that will be covered under supply. That is with respect to this. And this particular amendment is a retrospective amendment from 1/4/2017. So they have made it retrospective, that to April 2017. I don't understand why, because the GST law itself is applicable from 1/7/2017. With retrospective effect from 1/4/2017, they have made it. However, no refund can be claimed for the past periods. Suppose by mistake you have paid, thank you for making payment of tax, because of you only the country is growing, but you will not get any refund. If you have not paid, no need to pay. If you have paid, you will not get any refund with respect to that. That is with respect to this amendment, so of warehoused goods. Now, in this regard, we need to understand in customs one connection. So what is that? Whenever we are transferring the document of title before deposit of goods in the warehouse, so then it is called as sale on high seas. In that case, say for example, I am A and you are B. I imported the goods for $10,000 and I have transferred the document of title to you for $12,000. Now, what will be taken as the assessable value under customs? $12,000 will be taken as the assessable value under customs, and on which you need to compute the customs duty. That itself is the assessable value on which you need to compute customs duty, IGST, etc. and all. Suppose if I have imported for $10,000, I am selling to you for $9,000. Then what will be taken as the assessable value under customs? $9,000 only will be taken as assessable value under customs, unless otherwise customs officer rejects that value, but $9,000 only will be taken. That is the last purchase price will be taken as assessable value for payment of customs duty along with IGST. Now that $9,000 or $12,000, whatever I have received, that will be excluded from supply. The next aspect, suppose if it is warehoused goods, I have imported the goods and I deposited the goods in the warehouse. So that warehouse can be under customs warehouse. Then when I am transferring the warehouse document to you, that is warehouse receipt to you, now you will be filing the bill of entry, export bill of entry for clearance. Now what will be taken as the assessable value? The assessable value will be the original import price. Means initially I am importing for $10,000 now, that only will be taken. Even though I sell to you for $12,000 or I sell to you for $9,000, but the assessable value under customs will be $10,000 only. But while computing the IGST, because you are going to pay the IGST, while computing the IGST, you know what you should do? You need to take A, that is a regular way of computation, that is assessable value plus basic customs duty plus all customs duties up to IGST, or GST on purchase value. What is the price at which you are purchasing from me? Say in the first case $12,000, that whichever is higher. Suppose in the second case you are purchasing from me at $9,000, so that whichever is higher. So that is a regular way in which you compute the IGST, that is assessable value plus basic customs duty plus all customs duties, or GST on the price at which you have purchased, whichever is higher will be taken as the IGST for payment under customs in case of warehoused goods when you are buying from me and you are clearing it for home consumption. Okay, so that same will be applicable even in case of warehouse in SEZ or free trade warehousing zone. That is a connection related to customs. Next, so in case of co-insurance services, if lead insurer paid GST on the total premium, such insurance premium shared with the co-insurers is not a supply. Same way, reinsurance commission retained by the insurer for services provided to reinsurer is not a supply. For example, insurance company paid 3 lakhs as insurance premium to the reinsurer after deducting 40,000 as commission. Now reinsurer shall pay GST on 3 lakh 40 because the gross will be 3 lakh 40 and the commission retained by the insurer is not a supply. Then there is one point with respect to gifts. Gifts given by employer to employee is also covered under supply because employer and employer are treated as related. It's a related party transaction and it will be covered under supply 71C. Because usually the gifts which are given by employer employee is in the course of furtherance of business, so it's a related party transaction. But there is one exact relaxation. What is that? If the value of gifts does not exceed, while determining the value whether we need to include GST or exclude GST, if the value of gift does not exceed, so 50,000 rupees per annum per employee, then it is excluded from supply. What if the value of gift exceeds 50,000 per annum per employee? Then it is entirely covered under supply. Then specified actionable claims, HC block, horse racing, casinos, betting, lottery, online money gaming and gambling. So these are covered under supply because it is not excluded. And with respect to the specified actionable claim, you need to remember one point: all the specified actionable claim is now taxable at the rate of 40%. So previously it was taxable at the rate of 28%, but now the applicable rate of GST on this will be 40% because of the change in the GST law. And online gaming means offering a game on the internet. So often there will be a difference between online gaming and online money gaming, which we need to appreciate. Online money gaming is only actionable claim, specified actionable claim for which 40% is applicable, but online gaming still the rate of GST is 18% only. Online gaming means when we spend money to play the game, that is called as online gaming. And online money gaming is where we deposit the money or money's worth or virtual digital asset in order to play the game and earn the money. So big, but this particular game can be a game of skill or game of chance or both, and it may be legal or illegal. So even it may be legal or illegal. So see this, online money gaming, whether or not its outcome or performance is based on skill, chance or both, and whether the same is permissible or otherwise under any other law. Even if it is illegal, on that GST will be applicable and the rate will be 40%. Where online money gaming, because online money gaming is specified actionable claim, the rate is 40%. What if it is a normal online gaming? Normal online gaming, the rate of GST will be 18%. So in this case, that is normal online gaming, the rate of GST is 18% only. So only in case of online money gaming, the rate of GST is 40%. All other specified actionable claims also, it will be 40%. Then these specified actionable claims are treated as goods under GST. As it is treated as goods under GST, then on import of, say for example, there is a betting app which is outside India and you are located in India. Now when you are using that betting app, this will come under import of online money gaming. Now in that case, if it is goods, then import of goods should be subject to customs now. But no, so we have got a provision as per section 5 of IGST Act. Even though HC block, that is the specified actionable claims, are treated as goods, but import of the same is not covered under Customs Act, but it will be chargeable to IGST, that is specifically given under section 5 of IGST Act. That is about this. Next, we have two circulars in this regard related to exclusion from supply. First one is sale of land. So whenever there is a sale of land, it is excluded from supply. But how am I selling the land? After development. So I am a developer, I purchase the land, and to that land I have incurred lot of expense in terms of development of the land. Development of the land means what I will be doing? I will be doing leveling, and thereafter I will be dividing it into plots, laying down the road and pipelines, electricity lines, etc. And these developed plots I am selling. Now in that case, what is the treatment? So it is also still sale of land only and it is excluded from supply. But towards incurring these expenses, if I am collecting any development charges, that particular development charges what I am collecting will be covered under supply. For example, if I am taking 2000 rupees for the land and 500 rupees for the development charges, then this 2000 rupees is excluded from supply. That 500 rupees per square feet which I am collecting towards the development charges, that will be covered under supply. What if I am selling for 2500 rupees land? That's it. So development charges I am not charging separately. Then in that case, the entire 2500 rupees will be excluded from supply. That is with respect to this. So sale of land after some development such as leveling, laying down drainage lines, electricity lines is also sale of land and excluded from supply. However, services provided for development of land is not excluded from supply and shall attract GST. But usually when we are combining this and collecting, so definitely department will object. So because they will be telling like, in order to avoid the GST or trying to do that, etc. and all, that disputes are there. But in exam purpose, you need to take this view that when they have not given development charges separately, entirely it is excluded from supply. Then perquisites. Whether perquisites is also treated as gifts? No. So whenever perquisites are given by employer to employee, so that particular perquisites is forming part of salary. So that will come under services provided by employee to employer in the codes of employment for which they are receiving that perquisites. So due to that reason, that particular perquisites will be excluded from supply. Perquisites provided by employer to employee in terms of contractual agreement entered into between them will not be subject to GST when the same are provided in terms of the contract. Okay, so remember, anything which is given by employer to employee, divide into two. Perquisites or gifts. Gifts. So again, gifts will be divided into two. Value does not exceed 50,000. Value exceed 50,000. Value exceed 50,000 will become supply under 7(1)(c). Value does not exceed 50,000 per annum per employee. That's not a supply. Perquisites definitely not a supply because perquisites are covered under offer document and it will form part of salary. It is excluded from supply 7 subsection 2. Whenever we are writing 7 subsection 2, we need to read with schedule 3 of CGST Act. So schedule 1 is 7(1)(c), list of activities which are covered under supply even though without consideration, that is DRIP. Whereas this pillarless tow is 7 subsection 2 read with schedule 3. Let's see some important definitions or points. The first one is meaning of goods. Goods is defined under section 2 clause 52. Goods means any kind of movable property. So every movable property will be coming under goods, and goods includes actionable claims or growing crops or things attached to a forming part of earth which are agreed to be severed under a contract of supply. So anything that is attached to earth will not be treated as goods because it is immobile in nature. However, if it is entered into a contract wherein they are agreeing to cut it and deliver it, then it will become goods. Then goods excludes money and securities. So money and securities, if you observe, it is neither goods nor services. And the service definition is given under section 2 clause 1 or 2. So that is anything other than goods will be coming under service. So sale of land and sale of building is actually immobile property. So it will not come under goods, but it will come under services, but it is excluded from supply like that. Then as services excludes money and securities, but transaction in money for a separate consideration. So the conversion from one currency to another currency, or one form or denomination to another form or denomination for a separate consideration, that particular separate consideration will be treated as service. For example, I am converting dollars to rupees, and for which there is some currency conversion fee. That particular currency conversion fee will be treated as supply of service. Then securities is excluded from supply, that is transaction in securities, but facilitating or arranging transaction in securities is covered under services. That is, say I am selling the shares, so that will be not treated as goods as well as services. Consequently, there is no GST. But a stockbroker or a depository is facilitating that particular sale of shares, so they get a commission or brokerage. That particular brokerage or commission will be treated as supply of service. Same way, there is something called as security lending under SEBI. So in that case, I have some securities. I will be lending that securities to one borrower who has made a short sales, for which I will be getting a lending fee. Is it covered under facilitating or arranging transaction in securities? Yes, and that will be treated as service. Whereas it is not a transaction in securities, okay? It is sale of securities only excluded, but facilitating or arranging transaction in securities is covered under supply, that will be chargeable to GST. So that's what this services is about. Then money. Money means what? Money means Indian currency or foreign currency, or any instrument recognized by RBI, but money excludes currency held for numismatic value. So old coins will come under currency held for numismatic value. If there is any sale of old coins, that particular sale of old coins is excluded from the meaning of money, as it is not money, but it is movable in nature. It will be coming under goods. So therefore, sale of old coins is treated as sale of goods. Same way, cryptocurrency. Cryptocurrency is not recognized by RBI, as it is an instrument not recognized by RBI. It will not be treated as money, and as it is not money, will it come under goods? Yes, because the movable property, you should not understand that it should be only tangible property. Even intangible property also will be treated as goods. So movable property, there is a misconception that only tangible will come under movable property. Not necessary. Even intangible, like this particular cryptocurrency, also will be coming under goods. Okay, that is with respect to that. Next, therefore, sale of old coins and sale of cryptocurrency is treated as sale of goods, and it will attract GST. Actionable claims. Basically, actionable claim means an instrument which satisfies 4 conditions. Number 1, you have an instrument that has right to receive benefit or right to recover debt, and it is legally enforceable, and it can be transferred from one person to another person, and the holder of that right is entitled to receive the benefit or recover the debt. So bill of exchange, lottery, promissory note, bearer check, all these are actionable claims. But actionable claims which are covered under money definition, like bill of exchange, promissory note and bearer check, are covered under money definition because these are instruments recognized by RBI. Then it is neither goods nor services. But if you see the others, so other things other than these 3, other than bill of exchange, promissory note, bearer check, the others will be there, like lottery tickets, etc. and all, that will be treated as goods. But again, only specified actionable claims are covered under supply, HC block. But other than specified actionable claims is excluded, like it's not treated as supply, so excluded from supply. Example, voucher. Voucher is an actionable claim. How? I have a voucher, gift voucher, means I have right to receive a benefit, and I can transfer it to any person. And if it is redeemed, and if the gift is not received, or if the benefit is not received, we can legally enforce it, and the holder of that instrument is entitled to receive the benefit. So definitely voucher is an actionable claim, but it is not covered under money definition. What if it is a prepaid vouchers? Prepaid vouchers means sometimes, like, which are recognized by RBI, we pay money to buy the voucher. So if you go to gold shop, like lot of jewelers, so you pay money and get the voucher, so that is called as prepaid voucher. You go to Shoppers Stop or Landmark or many shops wherein we spend money to buy the voucher, that is called as prepaid vouchers. Those are instruments recognized by RBI because it is covered under Payment Act. Okay, prepaid instruments are covered under Payment and Settlement Systems Act of RBI. So due to that reason, it will be covered under money. So it is neither goods nor services. Whereas other vouchers are there, normal gift vouchers, in order to increase the customer loyalty they will be giving, that will be coming under others, but it is not covered under specified actionable claims. Therefore, it is not a supply. That is with respect to this. Then this already we discussed about online gaming, online money gaming. So meaning of consideration. Consideration is defined under section 2 clause 31. Consideration includes, consideration excludes. Consideration includes any money received or receivable. So that is either it can be monetary or non-monetary, and if it is monetary, received or receivable will be treated as consideration. Non-monetary can be in the form of goods or in the form of services, like doing an act or not doing an act, or it can be in the form of goods. But very, very important point is that consideration excludes subsidy from central government or state government, but subsidy from others like NGO or foreign government or local authority, that will be treated as consideration. And subsidy, should not be from CG or SG. Then next, consideration excludes refundable security deposits. So when we are collecting some security deposits which are refundable in nature, that will not be treated as consideration. What if the security deposit will be adjusted towards the payment to be received? Then it will be treated as consideration. And consideration can be from recipient or any other person. What we need to see is the presence of the consideration. So for example, there is a dealer, motor vehicle dealer, who is providing after sale service, free after sale service to the customer, but they will be recovering that money from the manufacturer. In that case, the consideration is involved even though not received from the recipient, and it will become supply. Then consideration should be in respect of, that is, if I agree that I will provide this service or I will sell this product for this much amount, that is in respect of, that amount what I convey is in respect of. Suppose if I am doing some activity and for return I get something, for example, an actor who is acting in a movie gets something as a gift from the producer, so that will be in response to, that is also consideration. Sometimes there will be inducement of, that is, we will be giving some offers or we will be giving some benefits, making the person to accept the contract. So that particular benefits what we have offered is also treated as in for the inducement of supply of goods or services. So the consideration can be in the form of in respect of, in response to, or for the inducement of supply of goods or services. Then activity without consideration is not a supply, and consideration without activity is also not a supply under 7(1)(a). So I am doing something, for example, I am taking this rocket revision batch and I am not going to get anything, because anyhow if I monetize this, you will be telling that, sir, there are a lot of ads and it will be disturbance, please don't monetize. So therefore I will not monetize this. When I am not monetizing this, I am not getting any benefit. So it is activity without consideration, not a supply. Sometimes, say for example, I have received some donations, and that donations I don't have any obligation to do anything in return against that donation. So you are giving me some donations, asking me to do something good for these students who are economically poor. So this particular donations what I received is for a purpose, definitely for a purpose, but in return I don't have an obligation to do something in return to you. So purpose, just because there is a purpose, you cannot call it as, this will be coming under conditional donations. So every donation is for a purpose only, but in return am I doing something in return for you? No. So which means that it is an unconditional donation, not treated as consideration. As it is not treated as consideration, so therefore whatever, there is no supply. So activity without consideration, not a supply. Consideration without activity is also not a supply under 7(1)(a). So donations divided into two: conditional donation, unconditional donation. Conditional donation means I have an obligation to do something in return to the money what you have given. So then it is a supply under 7(1)(a). That money what you have paid, the donation what you have given will be treated as consideration, and the obligation what I have to do something in return to you will be activity. Activity for consideration, supply under 7(1)(a). Unconditional donation means you are giving me some money, and against that I don't have any obligation to do anything in return to you. Then whatever money you have given, that is not at all treated as consideration. Consequently, it is not a supply. Suppose if I display your name, you are not insisting, but as a gratitude I display your name. Whether I give you business advantage or not, we need to check. Just mere display of name, there is no business advantage to the donor, then it will be unconditional donation, not treated as consideration, consequently not a supply. So just individual names and all being displayed. Suppose if the display of name gives a business advantage, say some company name or some individual name and their business name I have mentioned, like that, if there is any business advantage to the donor, then it will be treated as, deemed as conditional donation, and that activity will become supply and it will be treated as sponsorship services. And you know that sponsorship services, we have RCM section 9 subsection 3 read with notification 13 of 2017. Sponsorship service is covered under RCM. There are two conditions for sponsorship services. Number one, supplier should be other than body corporate. Number two, recipient should be body corporate or firm. Then it will be RCM, otherwise it will be FCM. So display of name gives business advantage to the donor, it is supply under 7(1)(a), and remember that will be treated as sponsorship services. Then meaning of person. So person is defined under section 2 clause 84, consideration is 2 clause 31, goods is 2 clause 52, and service is 2 clause 102, person is 2 clause 84. Person under GST is person under Income Tax Act, that is individual, HUF, AOP, BOI, firm, LLP, body corporate, company, cooperative society, trust or artificial juridical person. Whereas extra what we have in GST is central government and state government is also person. So therefore their activities also will be covered under GST. However, we have seen in exclusion from supply sovereign functions as well as liquor license. So sovereign functions, that is municipality, gram panchayat functions, or liquor license collected by government, that is excluded from supply. Then next, taxable person means the person who is liable to get registered or the person who is registered, both will be treated as taxable person. Registered person means only the person who is registered, whether he is liable to register or not liable to register. If he is registered, he is called as a registered person. Not only registered person plus a person who is liable to register but not registered. So these two people will come under taxable person. Then, because we have in offences and penalties, for example, section 122 subsection 1 says that there are some offences for which the penalty will be applicable on the taxable person. So therefore there you will get a confusion as to what is taxable person. That's why taxable person means either a registered person or person liable to get registered. Whereas section 122 subsection 2 penalty is there. That penalty is only on a registered person. Okay, not on the person liable to get registered, like that. Then meaning of business given under section 2 clause 17. And we have some general activities as well as some specific activities. These general activities, first we have trade, commerce, manufacture. That is the usual business. Then profession, occasion, adventure. So these, even wager is like betting activities or any other similar activities. So total 8, and this should be for either continuity may be there or may not be there. So total 8 activities: trade, commerce, manufacture, then profession, occasion, then adventure. These 3 related to skills, and thereafter wager, that is betting activity or any other similar activity, and its incidental or ancillary is also covered. For example, so you take a chartered accountant. That particular chartered accountant is practicing, so that is into profession. Now that chartered accountant gave a seminar or conducted a workshop and made some money, that will be coming under incidental to his business or ancillary to his business. Okay, so therefore suppose if he writes a book and he gets a royalty, that will be incidental or ancillary to his profession. That is also treated as business, irrespective of volume, frequency, continuity. What if it may be only for few days? Even then it will be covered under business. Say for example, one restaurant has been started, and that particular restaurant they have wound up in 1 month itself. So but for 1 month they did the business, that will be coming under business, whether or not for a pecuniary benefit. Pecuniary benefit, that is any monetary benefit or profit motive is present or not. Usually charitable trust or temples, etc., if you see, they will be selling certain calendars, dairies, prasadam, etc., and all, but not with the profit motive. Even then it will be coming under business. Okay, whether or not for a profit motive. For example, Tirumala temple. So now the laddu is always in the news for very bad reasons. So this particular laddu which is being sold by Tirumala Tirupati Devasthanam temple, will it be for a profit motive or non-profit motive? Non-profit motive, but it will be treated as trade, even though it is for non-profit motive, and it will fall under business. But we have an exemption, that's a different story, but it will be coming under business. Then specific activities. These specific activities, whether it is covered under the general meaning or not, will always be treated as business. What is that? Entry tickets. So any entry tickets. Then holding an office, any kind of entry ticket. Then next one, holding an office which is accepted in the course or furtherance of business. For example, so I have become the head of the movie artist association. I am an actor, means vocation, and when I become the head of the movie artist association, so then for doing that post, for holding that post, I will be getting that money, that one. So holding an office accepted in the course or furtherance of trade, vocation, profession. Supply of goods or service in connection with commencement or closure of business. I am commencing some business. In that connection, I made some sale of goods. That sale of goods may not be my business. When I close down business, I will sell my furniture and fixtures. That sale of furniture and fixtures is not my business, but it is in connection with commencement or closure of business. So due to that reason, it will be coming under business. Then provision of facilities or benefits. So there is an association or a club or a kind of body of individuals, so they will be providing services to their members. For example, apartment owners association will be providing facilities to their members, for which they will be collecting some money from the members called as maintenance charges. That will come under business. Provision of facilities, benefits to members by club, society or association. Moreover, it will come under 7(1)(a). That is any activity between a person other than individual and its members. Then any activity of a race club, including betting activities. All activities of race club, including the betting activities, will come under business. Even entry tickets, sale of entry tickets by the race club, sale of merchandise, etc. Then all activities of government is also treated as business. Then all activities of government fall under business. But remember, So that is all activities of government fall under business, but only sovereign functions and liquor license is excluded from supply. Remaining activities of government is covered under supply. And thereafter in exemption chapter, we have few activities of government which are exempted. That's a connection between these government activities. So all activities of government is business, which means that, so for example, RTO, collecting some money for the purpose of giving the driving license, that is a business. Like that, any activity of government will be treated as business. Next, we have meaning of related. So meaning of related is given under explanation to section 15. So whenever there is a transaction between related parties, keep that in mind. The transaction value under section 15 will not be applicable. Usually transaction value under section 15, that is nothing but the price actually paid or payable, but that will not be applicable, and we need to determine the value as per rules, CGST rules. And second point is that even though it is without consideration, certain activities will become supply, that is 7(1)(c). So we have related party transaction, import of service from a related person. So that is the objective of this meaning of related, why we need to understand. But again, it is not given in section 2, it is given in explanation to section 15. And what is the meaning of related? Family. Family means spouse and children of such person, whether or not dependent. So you have to remember this mnemonic: family scope. Family, spouse and children of the person, whether or not dependent, brothers, sisters, parents and grandparents of that person, if they are wholly and mainly dependent on that person. Yes, for sole selling agent. Sole selling agent or sole distributor or sole concessionaire. So anyway you can call that person. There is only one agent and all the supplies are made through that agent only. Then he will be a sole selling agent, deemed to be related. Then control. When it comes to control, so family scope. S for sole selling agent, C for control, O for officers or directors, P for partners, E for employer and employee. When it comes to control, there are many points in control. Number one, investment more than 50%. So X Limited invested 55% in Y Limited. They both are treated as related. Or majority common board of directors. X Limited has 3 board of directors ABC. Y Limited has 3 board of directors ABD. So 2 out of 3 are common. So they both are treated as related. Then control of operations. So one company controls the operations of the other company even though there is no investment made into that company. So there is a, say, X Limited just invested 25% in Y Limited or 28% in Y Limited. So control is not there. But X Limited made a shareholding agreement with Y Limited where X Limited will control the operations of the Y Limited by way of lending their brand name or support, etc. and all. So that is also treated as related. Then common shareholder holding greater than or equals to 25% in 2 companies. Say for example, there are 2 companies, X Limited and Y Limited. Now there is a shareholder. So now X Limited is not investing in Y Limited or Y Limited is not investing in X Limited. So there are 2 companies having a common shareholder, say Mr. A, and Mr. A is holding 25% or more in X Limited and 25% or more in Y Limited. Now these 2 companies will be treated as related. Not the shareholder and the company, but these 2 companies in which there is a common shareholder, those 2 companies will become related. Then they both are under the common control of a third person. That is 2 companies, 2 subsidiary companies having the same parent company. For example, X Limited and Y Limited are 2 separate companies. They don't have any connection. But X Limited parent company is A Limited and Y Limited parent company is also A Limited. Now these 2 companies will be treated as related. Then together they control a third person. So mainly, for example, there are 2 shareholders. Take any 2 shareholders. If these 2 shareholders together holds more than 50% in the company, then those 2 shareholders will be treated as related. If that be the case, all shareholders are related now, sir, correct. But the point is that we will see relationship always between 2 parties, that is supplier and recipient. So take any 2 shareholders together, if they are controlling the company, then those 2 shareholders will be treated as related. Then O for officers or directors of one another's business. That is, in my business I am appointing you as officer or director. In return, in your business you are appointing me as officer or director. So such persons are officers or directors of one another's business. Then P for partners. So such persons are legally recognized partners in business. That is, say there is a partnership firm ABC and Co, in which A and B are ABC are partners, A and B are related, B and C are related, and A and C are also related. Then E for employer and employee. So employer and employee are always treated as related. So therefore, in case of employer-employee transaction, so what will happen? There is a supply by employer to employee, either goods or services. We need to first check, is it for consideration or without consideration. If it is for consideration, then it is supply under 7(1)(a), and the value will be determined as per rule 28. For example, employer provided the food facility to the employee, for which employer collected a nominal amount of 20 rupees per meals. But even though there is nominal amount, but it is consideration, so it will become supply under 7(1)(a), but the 20 rupees will not be taken as value because employer and employer are treated as related. So therefore we need to determine the value as per rule 28 of CGST rules. So rule 28 says first we need to take open market value. If open market value is not available, then like, kind and quality. If like, kind and quality is not available, then cost plus 10%, that is rule 30. If that is also not available, then we need to determine the residual value. So that should be applied in this case. Then suppose if employer is giving either goods or services without consideration to the employee, then this is what I told you, it can be either perquisite or it can be gift. If it is covered under offer document, then it will be perquisite, not a supply. If it is not covered under offer document, then it will be gift, and we need to check the value of gift. If the value of gift does not exceed 50,000 rupees per annum per employee, then it is not a supply. If it exceeds, then entirely it will be treated as supply under 7(1)(c), and as it becomes supply, it's a related party transaction, and we need to determine the value as per rule 28. Then there is one more circular related to this related party transaction. There is a holding company and a subsidiary company, say X Limited and Y Limited. X Limited holds 55% in Y Limited, and now X Limited gets a further allotment of 10% of the shares from Y Limited. So this particular further allotment of shares by Y Limited to X Limited, will it be treated as supply? First of all, shares are neither goods nor services. So transaction in securities is excluded from goods and services. Due to that reason, it will not become supply. Activity of holding shares of a subsidiary company by a holding company cannot be treated as supply of service and cannot be taxed under GST, as shares are neither goods nor services. And what are the non-taxable supplies? Already we know. So alcoholic liquor for human consumption, undenatured extra neutral alcohol, rectified spirit used in manufacture of alcohol, and petroleum products, crude oil, petrol, high speed diesel, aviation, turbine fuel, and natural gas. So once an activity becomes supply, thereafter we need to check whether it will be coming under like taxable supply, exempted supply, non-taxable supply, etc. So that is the classification. Supply is broadly divided into 4. Taxable supply. Taxable supply means on which GST is payable, and exempted supply, that is, maybe it is notified as exempted from time to time. Government on the recommendations of GST Council as per section 11, read with notification 12/2017 as amended from time to time, they will be adding lot of exemptions, that is called as notified as exemption. Or in the tariff, the rate itself is nil, that is also exempted. Or non-taxable also will be coming under exempted. Then what are non-taxable? Just now we have seen on which there is no levy of GST. Zero rated supply as per section 16 of IGST Act. This is not given under CGST Act, it is given under IGST Act. As per section 16 of IGST Act, zero rated supplies means export of goods or services or supply of goods or services to special economic zone in respect of their authorized operations. That is very, very important. For example, I am making sale to SEZ, but that is not really used in the SEZ, that is used for their DTA unit. Say for example, HP is having one unit in SEZ and one unit outside SEZ. I provide the services to the unit outside SEZ, but I raised invoice to the unit of SEZ, then it is not for the authorized operations of SEZ, so it will not become zero rated supply. How can I prove that it is for the authorized operations of SEZ? There will be one SEZ officer, specified officer of SEZ. He need to endorse on the invoice as to whether it is for the authorized operations or not of the SEZ. Only then it will become zero rated supply. That is this. And as this is the discussion whether taxable supply includes exempted supply, no, because exempted supply includes non-taxable supply. That's why taxable supply does not include exempted supply. So this is the classification. So once the supply of goods or services is there, then we need to divide it into 2, on which GST payable, on which GST is not payable. If GST is payable, it will be treated as taxable supplies, and that is a balancing figure. If GST is not payable, why GST not payable? Maybe it is notified as exempted, or it will be nil rated, or it will be non-taxable. That's the reason why GST not payable. So what is the conclusion we can draw from this? That is, taxable supplies do not include exempted supplies. Then next you can see meaning of aggregate turnover. While determining the aggregate turnover is useful for many places in the GST. One for registration, composition scheme, applicability of e-invoice, applicability of QRMP scheme, and HSN. There are many places where we come across the aggregate turnover. So what is that aggregate turnover? All these 4 will be included in aggregate turnover. Taxable supplies will be included, exempted supplies will be included, and exempted includes non-taxable supply also. Exports and supply to SEZ is deemed interstate. Even deemed interstate or interstate supplies also will be included in aggregate turnover of persons having same permanent account number. For example, if I am having 10 different businesses under the same permanent account number, all the 10 businesses ka turnover we need to merge, and that will be taken to be computed on all India basis. Next, but excludes inward supply on which GST is payable under RCM, because we are talking about the turnover. Turnover means sales, but purchases will not be included in turnover, even though on which I have to pay GST under RCM, and taxes will be excluded. Whether old indirect taxes will be part of aggregate turnover? Yes, old indirect taxes like CST, state excise duty, central excise duty, VAT and all will be part of aggregate turnover. Only GST group will be excluded. Then this GST on sale of flats or buildings already we discussed. If entire money is received before obtaining completion certificate or first occupation, whichever is earlier, that will be covered under supply. It is not excluded from supply and it will be chargeable to GST. We will not call it as sale of building, but we will be treating it as works contract service. Suppose if part consideration is received before and part consideration received after, even then it is not excluded from supply. It is covered under supply entirely, not that part which is received before completion certificate. Entirely it will be chargeable to GST and we will be treating it as works contract service. If the entire consideration is received after obtaining completion certificate, then it will be excluded from supply, GST not payable, and it will be treated as sale of immovable property. Then, so here consideration, money received means consideration, either monetary or non-monetary, and CC is completion certificate, and FO is first occupation. Usually completion certificate will be issued by the competent authority like local authority. First occupation is the date on which it is first occupied by the buyer in the project. So the date on which it is occupied by one buyer, it is deemed that all other remaining flats unbooked also will be covered under occupation. So it is excluded from supply because it will come under after completion certificate. So that's what first occupation or completion certificate, whichever is earlier should be taken. Then next, in this regard, you need to remember what is the treatment in case of joint development agreement. For example, I am the landowner. I will be giving you the development right. You are the builder. So now what you will do for this development right, you will be giving me 3 flats as consideration. Now, so what is the transfer here? Sale of development rights. I am just giving you the development rights. For the development rights, you are giving me 3 flats. So this particular property rights which I am giving you is supply, and it is supply under 7(1)(a), where the 3 flats what you have given me will be coming under non-monetary consideration. This is from my side. From your side, you see, so what you are doing, you are a builder. So you are giving me 3 flats for which what is the consideration you are getting? Development rights, land development rights you are getting as consideration. So in this case, so this particular sale of building, but the consideration is already received, but it is in non-monetary form, but it is received before even starting the construction there. So therefore it will be coming under supply and chargeable to GST with respect to this 3 flats which you are allotting to me. Okay, even though the allotment is at a later point of time, but the consideration is already received with respect to that. Then meaning of distinct persons, this is mainly for the purpose of determining if there is any activity between the distinct person, even though without consideration, that constitutes supply. Every registration of a person to their another registration is a distinct person. Suppose if I am having multiple registrations, then one registration to other registration is known as distinct person, and registered establishment of a person in a state and unregistered establishment of that person in another state is also distinct person. For example, I have a registered establishment in Tamil Nadu and I have a branch in Karnataka. The branch in Karnataka is not registered. Why not registered? Because in that Karnataka branch I am making only exempted supplies. So therefore it is not registered in Karnataka. Even then, so this registered establishment in Tamil Nadu to unregistered establishment in Karnataka, it is treated as distinct person, and if there is any transaction, that will become supply under 7(1)(c), even though without consideration. Then third point, registered establishment of a person in a state and establishment outside India of that person is also distinct person, that is given under IGST Act. For example, I have an establishment in Chennai, Tamil Nadu, and I have an establishment in Singapore outside India. So which means this establishment in India and establishment outside India is also treated as distinct person. However, registered establishment of a person in a state and unregistered establishment in the same state of that person is not a distinct person. Say for example, I have a registered establishment in Tamil Nadu. Say Chennai, I have one registered establishment, and again in the same Tamil Nadu, Coimbatore, I have an unregistered establishment. So why Coimbatore unregistered establishment? I didn't go for separate registration because that particular establishment is making say exempted supplies. I did not go for separate registration. Now this Chennai and Coimbatore, will it become distinct person? No, because that is unregistered. If the unregistered establishment is another state, then it will become distinct person, not in the same state. Then next we have this multiple businesses, different state, each state you need to get a separate registration. You have multiple businesses in the same state but in different places within the state. Now with respect to each place of business, you have an option whether to go for separate registration, or you can continue with the single registration by showing one place as your principal place of business and other place as your additional place of business. You're doing multiple businesses, same state and in the same place, so cannot obtain separate registration with respect to that, because everything is in the same place. And remember, SEZ unit, suppose within the state, if I have different place of business, it is optional for me to go for separate registration. But what if it is a SEZ unit, say within Karnataka, in Bengaluru, I have one business establishment. In the same Karnataka, there is one SEZ, and in that SEZ, I have another establishment. Should I go for separate registration? Yes, I should definitely go for separate registration, even though it is in the same state. This optional is not applicable for SEZ unit. So, SEZ unit of a person, even though in the same state, is required to get a separate registration mandatorily. And what is the meaning of recipient? So recipient, if consideration is involved, the one who is liable to pay the consideration is the recipient. Suppose if consideration is not involved and if it is goods, the one who is receiving the goods will be the recipient, and if it is services, the one who is receiving the services will be recipient. And meaning of supplier. Supplier is simple, the person who is engaged in supply of goods or services and includes an agent. Okay. Whereas in case of specified actionable claims, remember, generally supplier means the one who is making supply of goods or services, includes an agent also. But in case of specified actionable claims, the person who owns or operates or manages digital or electronic platform shall be deemed to be supplier. For example, there is a gaming app, and that particular gaming app is developed by one company and they are operating that. So even though I am the owner of that gaming app, but the person who is operating it or who is managing it may be treated as a supplier for the purpose of payment of GST. So, but this is only in case of specified actionable claims. The person who owns, if they are not able to identify me, the one who operates or manages the digital or electronic platform shall be deemed to be supplier. Then once the activity becomes supply, we need to classify it into goods or services. That will be as per 7 subsection 1A read with schedule 2. So 7 subsection 1A, you need to write read with schedule 2 of CGST Act. 7.1C read with schedule 1 DRIP, and 7 subsection 1A read with schedule 2 classification of supply into goods or services. 7 subsection 2 read with schedule 3, so that will be exclusion from supply, that pillar less do. So once an activity becomes supply, check whether it is in relation to movable property. Yes, if there is a transfer of title, it will be supply of goods. If there is a transfer of right to use, then it will be coming under supply of services. When the title should be transferred, either the title can be transferred at present or the title can be transferred at a future date. And suppose if there is no transfer of title at present, example hire purchase, I am just giving you the possession of the asset, and upon payment of last installment the title will be transferred. Even then it will be treated as sale of goods, because today we agree that we transfer the title to you at a future date, so therefore it is sale of goods only, supply of goods only. And suppose if I am having a car and I am giving you right to use a car, I am not selling the car or I am not giving you the title of the car, but I am giving you right to use a car, then it will be coming under supply of services. Immovable property will never come under supply of goods, because we know that. So immobile property is excluded, sale of land and building is excluded from the supply, whereas immobile property will come under services when if there is a transfer of right to use immobile property, like renting of building or renting of land, leasing of land, etc., or bringing into existence an immobile property like construction services. Okay, so construction, example lifts and escalators, transfer of right to use, renting of land. Then IPR, intellectual property rights. When it comes to intellectual property rights, so we need to see, like there are a lot of intellectual property like copyright, trademark, patent, etc. If there is a permanent transfer, then it will be supply of goods. If there is a temporary transfer, then it will be supply of services. For example, I have a patent of a technology. That patent of a technology, I have sold it to you, then it will be coming under supply of goods. And whereas, suppose if I am the music director and I compose a music only for that movie, if I receive, but that music is mine, I can use it for some other movie also, then it will be coming under temporary transfer of IPR and it will be supply of service. Then carrying out process on the goods belonging to other person. For example, you are giving me cloth. On that cloth, I am doing the stitching. While doing the stitching, I may add some material also, like thread, etc. Still, the substantial material you have given on which I do the process. So, this activity is called as supply of services. Suppose if I am only buying the cloth, I am only stitching and giving you the garment, but some materials you may give, but still substantial material I have only procured and I have given you the output. So, therefore, it is treated as sale of goods. Then whenever there is supply of goods along with supply of services in the transaction, so if this is three notified activities, always treat as supply of service. So in this, what will be there? Even goods element as well as service element, both will be there. Works contract, then information technology software, and supply of food. In these three, there is both goods element and service element, but it will always be treated as supply of service. Works contract means a contract in relation to immovable property. For example, you are asking me to construct a building. I will only buy the cement, bricks, building material, electrical fittings, plumbing material, everything, and I will construct the building and give it to you. So sale of goods is also there and supply of service is also there, but it will be treated as works contract service, service only. The same way food, there will be ingredients which are used in the food and cooking is there, but always it will be treated as supply of service. Same way software, it can be a package software which is sold like a product in the market, or it can be developed for the need of a particular person like a customized software, whatever it may be, but it will be treated as supply of services. Then apart from this, any other activity we need to apply, that is if the activity, if the transaction involves both goods and services, apart from these three, how we need to check? So check whether it is a composite supply or mixed supply. If it is a composite supply, see the principal supply. If the principal supply is goods, entire activity will be goods. Example, AC and installation. AC will be goods, installation will be service, and it is a composite supply. So therefore AC goods, so entire activity will be treated as supply of goods. Whereas in case of study materials and coaching, study material will be coming under goods, coaching will be coming under services, and it is a composite supply. The principal supply is coaching, so which is service, so entirely it will be treated as supply of service. If it is a mixed supply, see the highest rate. If the highest rate is goods, entirely it is goods. If the highest rate is service, entirely it is services. For example, TV plus optional warranty. Say TV is 28% and optional warranty is 18%. Now in that case, highest rate is what? TV, and optional warranty and TV is not composite supply, it's a mixed supply because it is not naturally bundled, and TV is having a highest rate of 28%, so entirely it will be 28%. Whereas suppose if it is video lectures and pen drive, video lectures is service, pen drive will be goods, and it is not naturally bundled, so therefore it will be mixed supply. And say pen drive will be taxable at the rate of 12% and video lectures is at the rate of 18%, the highest rate is 18%, so entirely, so 18% will be, that is, it is treated as supply of services. Then any other activity apart from these five, any other activity we need to bring it under supply of services. It comes under either doing an act, so doing something, or not doing an act, that is forbearance, not doing a particular activity like non-compete fees, etc. and all. Then tolerating an act, so tolerating an act like, so I am accepting something which you are doing for which I will collect some charges like liquidated damages, etc. and all. So doing an act, not doing an act, tolerating an act. Then say this transfer of business asset. Whenever there is a transfer of business asset, definitely it will be supply of goods. What if business asset is put to private use? Means I am not giving you the title, I am just asking you to use, so therefore it is supply of service. Only when an activity is supply, the above classification shall arise. What if the activity is not a supply? So we don't have to apply this 7-1A read with schedule 2. Then see this meaning of works contract. Works contract means contract involving transfer of property in goods as well as supply of service in relation to immovable property against a single consideration. Then it will be coming under works contract. But remember, it should be in relation to immovable property. What if it is in relation to movable property? Then it will come under either composite supply or mixed supply. And previously in old indirect tax regime, they were classifying it as partly goods, partly service, but now entirely it will be treated as supply of services. Then job work. What is job work? That carrying out process on the goods belonging to other person. So you are giving me some goods on which if I do the process, that will be called as job work. And here the job worker, the one who is doing the process, may be or may not be registered. But if the recipient, that is on whose goods I am doing the process, if you are registered, then this activity will be treated as job work. What if you are not registered? This activity is not treated as job work, it will be some other services. For example, you are purchasing the wedding cards and you are giving it to me, I am doing the printing on that wedding cards. Now as you are recipient who is unregistered, so therefore this particular activity will be some other service, not job work, but it will be treated as service. And suppose if you are registered, then whatever activity that I do will become job work. So job worker, supplier may or may not be registered, but the principal manufacturer, that is the recipient, should be registered. Process carried out may or may not be manufactured, and job work will be usually taxable at 5%. What if the recipient is not registered? It is not job work, some other service, and the 5% concessional rate is not applicable. That is this. Then so we completed section 7, 7.1 inclusion, 7.1A classification, 7 subsection 2 exclusions. Now we are moving on to section 8. Section 8 talks about composite supply and mixed supply. Composite supply definition you need to remember. two or more supplies, that two what supplies? Taxable supplies, naturally bundled in the ordinary course of business, means one cannot be supplied without the another, wherein one of which is a principal supply. So that is, there is a predominant element in the transaction, that is principal supply. Then it will be called as composite supply. Two or more supplies naturally bundled in the ordinary course of business, and one of which is principal supply. Whereas mixed supply is not a composite supply actually first. So mixed supply does not constitute composite supply, and mixed supply is for a single price, and here there are two or more individual supplies. Okay, then it will be mixed supply. So naturally bundled means one supply cannot be made without the another. So we need to see from the majority point of view. For example, laptop and laptop bag. Usually laptop and laptop bag, usually or generally it will be naturally bundled. Okay, even though there are exceptions. So check from majority service providers point of view. And what is the principal supply? Principal supply means a predominant element in the transaction where other supplies are ancillary to it. So then it will be coming under principal supply, predominant element in the transaction. Okay. Then you can see here two or more supplies in a single transaction. So first you need to check whether there are two or more supplies in a single transaction. No, there is only one supply. Then it will be like section 7, section 8 is not applicable. Yes, there are two or more supplies in a single transaction. Now check whether these three conditions are satisfied. All are taxable, naturally bundled in the ordinary course of business, and the principal supply is identifiable. If everything is yes, all are taxable, naturally bundled in the ordinary course of business, principal supply is identifiable. If everything is yes, then it will be coming under composite supply. If it is composite supply, we need to take the rate of principal supply and apply it on the entire transaction. Okay, so rate of principal supply for entire transaction, then it will be coming under composite supply. Principal supply rate should be taken. And what is principal supply? Predominant element in the transaction. Suppose if any one condition fails, say all are not taxable, one taxable, one exempted. All are taxable but not naturally bundled. Naturally bundled means one cannot be supplied without the another. So say not naturally bundled, or all are taxable, naturally bundled, but the principal supply could not be identified. So in all these cases, it is not a composite supply, but check whether it is for a single price. If it is yes, then it will be mixed supply. We need to take highest rate for entire transaction. So not even single price, it is like a separate price. Then individual supply, we will take respective rate for respective supply. Okay, for example, inverter 12,000, battery 10,000. So inverter and battery is sold together. Now, is it all taxable? Yes. Naturally bundled? No, not naturally bundled in the ordinary course of business, because inverter can be sold separately, battery can be sold separately. Even though it will not work without inverter, battery will not work, battery without battery, inverter will not work. But as a seller, when I am selling it, I can sell separately also, na? So not naturally bundled. So is it for a single price? No, not for a single price. So it is for a separate price. It will come under individual supplies. So 12,000 inverter taxable at the rate applicable to inverter, and 10,000 battery taxable at the rate applicable to the battery. Then, so look into note 1. In case of servicing of cars, actually there are two circulars which is giving that you don't apply the composite supply, mixed supply, what we have discussed so far, and we need to follow the circular only. Even though circular is not binding on the taxpayer, but it is binding on the department. So when it comes to exam point of view, it is binding on you. So you have to follow these circulars. Don't write in exam that the taxpayer at their option can choose. So therefore I am not following the circular like that. So therefore for exam purpose, all the circulars are applicable for you. So in case of servicing of cars, the test of composite supply should not be applied. So what they are telling, in case of servicing of car, there are two elements. One will be like providing the service of repairs, like changing the parts. So first there is replacement of parts, part sold plus replacement of part, labor charges for replacement. This replacement of parts is a goods element, labor charges for replacement of part is the service element. These two, so even though naturally bundled in the ordinary course of business, but we need to treat it as individual supplies. So parts replaced and labor charges for replacement are treated as individual supplies if the amount is shown separately for each. Actually it will become composite supply, but the circular superimposes and says that it is not a composite supply, you treat it as individual supplies. Then another one, generally in case of some theaters, they will be giving as a part of the ticket itself food and beverages. What is the treatment of that? If always for ticket, if they give food and beverages, then it will be composite supply, and that food and beverages also will be taxable at the rate applicable to the cinema theater. Suppose if it is not food and beverages, like food and beverages is not given as a part of the ticket, you have to buy separately. So whether you are buying at the time of buying the ticket or you are buying it afterwards, whatever it may be, it is not given as a part of the ticket, then it will be taxable at the separate rate as individual supplies. Food and beverages purchased in a theater, taxable as individual supplies, taxable at the rate applicable to restaurant. What is that? 5%. Okay. And if the same is purchased along with ticket, then it may attract composite supply. I am not telling that it shall attract, it may attract the composite supply. In such case, food and beverages taxable at the rate applicable to cinema hall when, if it is given along with the ticket. If it is given along with the ticket, it's not optional, mandatory, like preview theaters or some costly theaters, they are giving food and beverages as a part of the ticket, in that case only. And examples of naturally bundle, you can see accommodation service with complimentary breakfast. That will be coming under naturally bundle. Why? Because you cannot stay without the food. Even if you are not eating food, you have to pay the same amount. Then sale of TV with mandatory warranty. That's not an option to select. Mandatorily you are getting it. Then air travel and complimentary food and beverages. Even if you don't want the food and beverages, it will be given to you. And laptop and laptop bag. These are some examples of naturally bundled in the ordinary course of business. Then we are moving on to the summary of CBIC circulars related to supply. So we completed supply and composite and mixed supply. So here the first issue is with respect to interstate movement of conveyances between the distinct person. Say there is a one distinct person in Tamil Nadu and another person in Maharashtra, which means I have two registration, one in Tamil Nadu, another one in Maharashtra. Now I am sending the goods from Tamil Nadu to Maharashtra in a lorry. So whether this lorry will be goods, yes, lorry is goods, but this particular lorry which I am sending from Tamil Nadu to Maharashtra, even though there is a movement of goods, even though it is supply under 7(1)(c), but the circular says that it is not a supply, because any movement of conveyance between the distinct person carrying the people or carrying the goods, on that conveyance there is no GST, it is not a supply. So first point what you need to remember is that movement of conveyance between the distinct person carrying goods or people is not a supply. Number two, so when I am sending the conveyance for repair work also, say I have a workshop in Kerala, from Tamil Nadu to Kerala I am sending the vehicle for the workshop for repair, then also it is not a supply. Number three, that workshop which will be doing the repair is providing the services, so that will become supply. So only movement of conveyance is not a supply, but the workshop in Kerala which is doing service, they will raise invoice to Tamil Nadu for the repair work, that will become supply under 7(1)(c). Same way, if there is any movement of tools, spare parts, etc. between the distinct persons. Say for example, I have a factory in Telangana, and from Tamil Nadu to Telangana, I am sending the spare parts for the factory in Telangana for usage in that factory, not for further sale. If it is for further sale, then it will be coming under normal goods and it will become supply under 7(1)(c). But these spare parts which I am sending to Telangana factory is not for further sale, but for consumption in Telangana factory, even that is also excluded from supply. So any movement of goods, so between the distinct person carrying goods or passengers or for repairs is not a supply. Next what we have seen, however, repair work will be treated as supply. And then we have seen, so the above circular is extended to interstate movement of tools, rigs, etc. spare parts, but which are not for further supply, except in case where the movement is for further supply of this same. And even though this circular is talking about interstate movement, but the same circular is equally applicable. The principle of this circular is equally applicable in case of intrastate movement also between the distinct person. That is, if I have multiple registrations within the same state also, I can follow this circular. Then when an agent is termed as acting on behalf of principal, we already know that if it is a sale transaction and the invoice is raised by agent in their name, so then the agent is acting on behalf of principal. If the purchase invoice is in the name of the agent, then also agent is acting on behalf of principal. When the agent is acting on behalf of principal, between the principal and agent, the transaction of goods will become supply under 7(1)(c). Then, so usually in case of print industry, if you see, so in print industry what will happen, there will be like printing activity which is service, and the paper and ink will be coming under goods. So now whether it is treated as supply of goods or supply of services, so because in the transaction there will be both elements, so now we need to apply composite supply. The circular says treat it as composite supply. In the print activity, the paper and printing is there, so paper is goods element, printing is service element, you deem it as composite supply, and whatever is principal supply, based on that it will be applicable. For example, if you take books, brochures, flyers, etc., where printing is the predominant element, so it is service, so entire activity will be treated as supply of service. Whereas in case of tissue papers, letterheads, etc., envelopes, where just the logo of the brand name is printed, there the printing is ancillary, the paper is only primary or principal element, so or predominant element, so due to that reason it will be treated as supply of goods. Then next one, in bus body building, so usually in bus body building what will happen, so they will be bringing the engine and the chassis and the tires, so we need to construct a bus body, and for doing that bus body construction, first we will be requiring the metal sheets, pipes, etc. Thereafter a fabrication and installation needs to be done. Again the circular says you treat it as composite supply and you apply the principal supply. What is the principal supply here? Mostly it will be installation and fabrication, because the metal sheets and pipes is not the predominant element, so it will be treated as supply of services. Again same way, rethreading of tires. In rethreading of tires, we will take the old tire and we will add the rubber grip. In that adding of rubber grip, that rubber is the goods element and rethreading is the service element. Again, what is the predominant element here? So service is the predominant element, that rethreading is the predominant element, so it will be treated as supply of services. But remember, when the old tire is given by the other person on which we do the rethreading, it is supply of service. What if we purchase the old tire from that person and sell the rethreaded tire? Then it will be sale of goods only. Next, priority sector lending certificates are used between the banks in order to achieve the priority sector lending target. For example, I am a bank and I have a priority sector lending target of 30% of my public deposits. Say 100 crores is my deposit, 30 crores I have to give lending to the priority sector like agriculture, housing loans, etc. Now I am not able to achieve, 25 crores only I achieved, 5 crores there is a shortfall. Now if I am not giving that loan of 5 crores to priority sector, my license will be cancelled. So I will buy a priority sector lending certificate from another bank which has overachieved. So one bank selling priority sector lending certificate to another bank, it will be treated as sale of goods and it will be subject to GST. This is not transaction in securities, so it will be goods, and also it will come under deemed interstate supply. Transaction in PSLC will happen through e-Kuber portal of RBI. So the selling bank don't know the branch of the buying bank don't know the branch of the selling bank. Due to that reason, it will be deemed interstate supply. Also, this particular transaction is notified as list of goods on which GST is payable under RCM as per section 9 subsection 3 read with notification 4 of 2017. So therefore, the buying bank which buys the priority sector lending certificate will pay GST under RCM. That is with respect to this. Then artworks. Usually artwork will be sent by the artist to the art gallery. Say for example, I make an artwork. That artwork I send to the gallery for the purpose of display and sale. Now today I will not receive any money. So today it is not treated as supply. But that particular art gallery, one person will visit and the art gallery will make sale to that person. The day on which art gallery makes sale to that person, on that day only my consideration is certain. So it will be treated as supply in my hands only on that day when art gallery is selling it to the buyer. In the case of art gallery, always it is the day on which when they are selling, but in my hands I am talking about, that is in the hands of the artist. Then tenancy rights or pagadi system. Tenancy right refers to the right of tenancy, wherein if I take a property on rent, I am having the tenancy right for say 3 years or 4 years, which means the owner cannot ask me to vacate the property, so I will also not vacate the property. Now this tenancy right, I can transfer it to another tenant. When I transfer it to another tenant, I will receive a premium. So that particular tenancy premium is always taxable in my hands. Now what I will do, a share of that premium I will share with the property owner. Say for example, I received 50,000 as tenancy premium and 20,000 I give to the property owner. So if the rent of that property is taxable, the 20,000 received by property owner also taxable. If the rent of that property is exempted, the tenancy premium share of 20,000 received by property owner is exempted. But what about the tenancy premium received by me? It will always be taxable in my hands. Okay, that is this. Then GST on director remuneration. If the director is an employee of the company, so how to identify whether he is an employee of the company or not? Check the TDS. If the TDS is deducted under 192, so then that is while making payment to the director. If the TDS is deducted under 192 of Income Tax Act, then the money so received by the director will be as an employee, so therefore it will come under income from salaries. Therefore as an employee, so the particular activity is excluded from supply, because employee to employer in the course of employment is excluded from supply. What if the money paid by the company to the director is subject to TDS under 194J? Then this particular money which is received by the director will come under PGBP. It is not salary. There is no employer-employee relationship. So that will become supply. Also one important point, keep that in mind, that director services to company is covered under RCM, where the GST is payable by the company or body corporate under RCM. Then whether insured getting no claim bonus from insurance company is supply of service. So I am going for a renewal of the insurance policy. Last year on my car, I took the insurance, but I have not lodged any claim. This year I am paying the renewal premium. So I have to pay a renewal premium of 8,000. But insurance company is asking me to pay only 7,000 because last year I did not claim anything. They are giving me a no claim bonus. So instead of 8,000, I am paying 7,000. Now I am saving 1,000. So can we say that this 1,000 rupees what we saved is the money earned, because income saved is income earned. So 1,000 saved is 1,000 earned. So therefore can we treat as consideration? No, because in expectation of this 1,000, we did not keep quiet in lodging the claim. As there was no accident, we did not lodge the claim, not in expectation of this 1,000 rupees. So due to that reason, this 1,000 rupees whatever is received by us indirectly will not be treated as consideration. So it is not a supply of service, and no claim bonus cannot be treated as consideration for any supply provided by insured to the insurance company. Then del creditor agent. Del creditor agent usually get interest. See, remember, interest is divided into two in GST. Interest on loans, advances, deposits, that will be exempted, whereas interest on account of delay in receipt of consideration, that interest on account of delay in receipt of consideration will be taxable. Now a del creditor agent will be receiving the interest. What is the treatment of that interest? So first, is the del creditor agent raising invoice in his name? Yes. Del creditor agent is raising invoice in his name, means he is an agent acting on behalf of principal. When he collect the interest, that is on account of delay in receipt of consideration, and it will be taxable. That is including the value and taxable accordingly. Interest is not a separate transaction. So interest wherever taxable, you include in the value of supply on which GST payable. Suppose if the invoice is not raised by the del creditor agent in their name, means I am not raising invoice in my name, the principal is raising invoice. Now for you, principal is the seller, I am not the seller. So when you pay the interest to me, so that interest is on account of giving you a finance facility like loan or advance, therefore this interest will be exempted. So if del creditor agent is raising invoice in the name of the principal, then interest collected by del creditor agent is exempted under interest on loans, advances, deposits. If the del creditor agent is raising invoice in their name, then interest collected by del creditor agent is taxable under interest on account of delay in receipt of consideration. Then whether insurance company is liable to pay GST on the salvage value or wreck value. So usually whenever there is a car accident, say there is a major accident, so what will happen? Insurance company will compensate the insured. Now this particular insured will be having the salvage of the asset, that is the car remaining parts will be there. Now who owns that remaining parts of the car? Suppose if the insurance company has paid the entire amount without reducing any salvage, then in that case the salvage is the property of the insurance company, and the insurance company when they sell that particular salvage, so they will get a consideration that will become supply under 71A, and they have to pay GST on the sale of that salvage. Suppose if the insurance company has deducted that salvage, say 10 lakhs minus 2 lakhs, like that they deducted, and they paid only 8 lakhs as compensation, that 2 lakhs is not owned by the insurance company, that will be owned by the insured. When he sells it, it may become supply under 71A in his hands, because it should be in the course or furtherance of business, otherwise it is not a supply. Salvage remains with insured, which means what happens? Insurance company is deducting the salvage and paying the remaining amount. Say 10 lakhs minus 2 lakhs, 8 lakhs they are paying. So now this insured, is this a supply in the hands of the insurance company when the insured sells the salvage? No, not a supply in the hands of the insurance company. It may be supply in the hands of the insured. 71A, if the car is a business asset and it will come under disposal of business asset, maybe there. Okay, it is in the course or furtherance of business, incidental or ancillary to business, there it will come. Suppose if salvage become the property of the insurance company, means what? 10 lakhs, they are not reducing 2 lakhs, entire 10 lakhs is given. Sale of such salvage treated as supply, because the insurance company is going to sell that now, it is owned by insurance company now, the salvage, and in the hands of the insurance company and GST payable. Insurance compensation received by the insured is treated as consideration or not treated as consideration? Not treated as consideration, because there is another circular. Liquidated damages. Any liquidated damages which is collected by a person which is in the nature of compensatory, that is he suffered a loss, and to that suffering of loss he received some money, because no one will enter into a contract to suffer the loss and receive the money. So he suffered a loss and he received that money. That will be treated as consideration? No, it will not be treated as consideration. Consequently, it is not a supply. So therefore, insurance compensation will come under compensatory nature, liquidated damages which are compensatory nature and not treated as consideration and not a supply. Then that is this next page, you can see the last circular, GST on liquidated damages, compensatory and penalty arising out of breach of contract. So first of all, why this discussion has arisen? Because we have seen that any activity for a consideration is supply under 7(1)(a). Also in 7 subsection 1 capital A, consideration for tolerating an act is supply of services. But what happens here? First, there is a tolerating an act. For tolerating an act, we are receiving some money. So this money which we are receiving, is it covered under supply or not a supply is the moot question here. For that, what we need to see is that this liquidated damages or compensation, whatever we have collected for non-performance of contract or breach of contract, if it is compensatory in nature, means the person who is receiving that money has suffered a loss which is irrecoverable loss, and that particular loss is given by way of compensation. So this will not be a contractual payment. Consequently, it is not treated as consideration. Example, compensation ordered by court or insurance compensation. Say for example, I enter into contract with you to act in a particular movie. Now what I have done is that I stopped acting, not that I have delayed acting. I stopped means I have broken the contract, means you suffered a loss, and that particular loss what you have suffered is irrecoverable loss. Now in this case, you ask me to pay a compensation. That compensation which I paid you is not treated as consideration in your hands. That is this, not treated as consideration and not a supply, because it is mere compensation to compensate the loss or damage or injury. Means there should be a loss or damage or injury to compensate that the money should be collected. Suppose if it is specified in the contract as a part of commercial terms between the parties, that is, it is specified, but again it is specified that even though I am not suffering loss, but if you do this, you have to pay this, like that it is specified. For example, check dishonor charges. Check dishonor charges, even though bank is not suffering any loss because of the dishonor, but they are telling that you have to pay the check dishonor charges. Now, this particular intention is to discourage a person from doing an act, so it will come under penalizing a person to discourage such an act. Even then it is not treated as consideration. These charges are in the nature of penalizing a person to discourage such act, not treated as consideration and not a supply. Example, check dishonor charges, traffic fine. Any other case, balancing figure. It is not compensatory in nature, it is not penalizing in nature. First check the question. Is there a loss? Yes. For that the money is received. Yes. Compensatory, not treated as consideration. Is there a loss? No. The money is received. Whether the intention is to discourage the person from doing such act? Yes. Then also not a consideration. Otherwise it will be consideration. What is the treatment? It is taxable based on principal supply. So for example, if the principal supply is taxable, then entirely taxable. Otherwise it is exempted. Let's take an example of train ticket cancellation charges. If it is a AC ticket, transportation of passengers in AC is taxable. So AC train ticket cancellation charges is also taxable. If it is transportation of passengers in sleeper class, it is exempted. Then cancellation charges for that is also exempted. Treated as consideration, and taxability depends upon principal supply. Example, train ticket cancellation charges. Then we have some examples. Check dishonor, fine or penalty. What is that I told you? So it is penalizing in nature, not treated as supply, not a consideration. Penalty for violation of law, same, like GST penalty, income tax penalty, traffic fine penalty, all these things are to discourage a person from doing an act, not treated as supply. Forfeiture of salary or bond, again, so to discourage a person from doing an act, penalizing in nature, not treated as consideration, not a supply. Whereas late payment surcharge or fee, so I am okay, I am agreeing, so you can pay late, for which you are paying some money. It's not to discourage, because I can understand that you are not able to pay on time. So this will be treated as consideration, and it will be assessed at the same rate applicable to principal supply. Then fixed charges for power. So generally this is others. That is, it is not compensatory or penal, it is others, but electricity is exempted. So transmission and distribution of electricity by electricity or distribution, like electricity transmission or distribution utility. Remember, So transmission and distribution of electricity, by electricity transmission or distribution, utility is exempted. So therefore, as the electricity is exempted, this fixed charges is also coming under exemption. Then cancellation charges, just now we discussed. Forfeiture of earnest money. Sometimes in immovable property transaction and all, some earnest money is collected, and that will be forfeited if the person is not honoring to purchase. So initially you paid me a token advance and I have kept it. Thereafter you have to buy, but you did not buy, so I will forfeit it. So where it will come under compensatory nature. I suffered a loss. Why I suffered a loss? If you have purchased it, I would have sold it. Now I need to find another buyer. So therefore, forfeiture of earnest money in certain cases such as immovable property agreement breach or non-serious bidder penalties is not taxable, as it represents mere flow of money without any consideration for another supply. So where it will come? It will come under compensatory in nature. Then we have one RBI circular wherein previously for certain loan transactions and all, they used to call penal interest, etc. But now what they are telling, for all the loan transactions other than credit card or external commercial borrowings or trade credits, other than these three. So bank, other than credit card, external commercial borrowings or trade credits, other than these three, in all other places, they need to call it as penal charges, not penal interest. So as per RBI circular, banks and NBFCs should collect penal charges instead of penal interest for non-compliance of loan terms like delay in payment, etc. and all. These penal charges will not be treated as consideration. Why? It will come under the money which is collected for discouraging a person to do such an act. So therefore, it is penalizing in nature to discourage a person from doing it. As per the above circular, it is not treated as consideration. Such penal charges not treated as consideration as per the circular, as the same is penal in nature to discourage a person from doing breach. Consequently, penal charges are not chargeable to GST. Then, what about penal interest? Penal interest is covered under GST, but again, it is not penal charges, penal interest. It's a different story. But penal interest again depends upon the main interest. Penal interest levied by banks and NBFCs. If interest involved in EMI is taxable, then penal interest is also taxable. For example, delay in payment of credit card EMI. Because for credit card, this penal charges circular is not applicable. So still it is called as penal interest. Usually interest on loans, advances, deposits is exempted other than interest involved in credit card. So interest involved in credit card is actually taxable. As interest involved in credit card is taxable, so therefore penal charges for delay in receipt of credit card EMI is also taxable. Whereas trade credit obligations will be there. Trade credit means you will just take the money, like you have to pay me money between two parties. Okay, so trade credits. In case of trade credits like bank overdraft, etc. and all, they call it as penal interest, but usually overdraft interest is exempted. So therefore penal interest is also exempted. If interest involved in EMI is exempted, then penal interest is also exempted. Example, delay in payment of trade credit obligations. So with this we completed introduction and supply under GST. So we have covered majorly everything. So whatever doubts you have, you can just put it in this, and we are moving on to the next chapter.